Okay, here we go. Okay, Joe, thank you very much for participating in this interview. I'm just going to go down the list here with these questions.
No,
And
no, no problem. Thanks for having me.
the first, I guess, prior to the first question, is I'm trying to remember you first took the webinar when?
It was September of 2016, but I paid for your course early, and you went ahead and sent me all the primer videos and information. And so I basically I just started right there and tried to glean information off of that, and of course participated in your webinar in September of 2016.
Okay, that's right. I think I sent you the videos in May or June, even, right? You signed up pretty
Yes,
early.
correct, correct. You sent me
Yes.
all the videos and reading material and stuff like that.
Okay, so September 2016 actually started May 2016, June 2016, and we are talking in January of 2018. So that gives a good time frame.
Right.
Can you tell me what your background was in trading prior to studying my course, if any?
My background mostly started, of course, like in stocks and stuff like that. Uh, and I guess with my personality or psychology, kind of wanted something a little more along the scalping side. So I gravitated towards the charts, technical analysis. But the charts don't tell you the whole story, and I learned that basically the hard way.
Yeah,
Uh,
as does
just
everyone.
had some good runs, and then you start losing your edge and wondering what's going on. Why didn't this line hold, or why didn't this hold? And I don't know. I guess by chance, I just you look at all these videos and pictures of these trading rooms, and you see all these pictures of computer screens with the DOMs and the ladders on there, and you hardly see any charts. And I just by happen chance got lucky and got onto the Jigsaw platform and software, and on their website they have an education tab, and basically that's where I found your no BS day trading website.
All right. When you first signed up for the webinar, and I sent you all the videos, the starter videos, as I call them, can you just give a brief overview of your take on the starter videos, as in how helpful or not helpful they were? I'm assuming that you found them helpful. But I guess I try to emphasize the importance of people studying those prior to the live sessions. So would you agree that's the way to go with it, and that they're definitely worth taking the time to study?
Oh, absolutely. I mean, because I mean, in your webinar, you start right away with the concepts and what you're looking for, and I just think it'd be, very beneficial if somebody already going into the webinar has an idea of what you're talking about, what you're looking for, what not to look for, because there's a lot of head fakes and stuff like that. Yeah, I mean, I think that helped me a lot because I had, June, July, August, basically going over the videos and going over all the material. And, when the webinar started, I had a pretty good idea of what was going on. But to actually see you implement that and work the trades and work areas that you're looking at, yeah, it was definitely beneficial.
Okay. And I mean, like, would you say even just studying the videos, were you noticing improvements even prior to the live sessions, like on your own when you were watching? Were you starting to pick up some of the things that I had been discussing in the starter videos?
Oh yeah, I mean, I was around May 15th, so the mid-May when I got all your material, and I was already taking some trades and stuff even before the webinar. So I would say, oh no, by July I was trading your concepts and everything. And one of your key points, I mean, you have to do this in a live account. The demo demo mode or sim mode is just not, it's just not the market action. whether you're getting fills or not, or it's a whole different ball game. If I can tell anybody, just start small. I put $1,000 in an account and I traded one contract,
Yeah.
and that's it.
Yeah. And that's definitely how you should start. That's how I always recommend. If you can't make it on a 1 lot, you can't make it on a 10 lot.
Right.
So, okay. With regards to the live sessions, when you were watching and perhaps also rewatching the recordings, were there any particular nuggets of wisdom? I mean, I'm sure there were a few, but any that stand out in your brain as sort of aha moments, or something that you saw live that when you saw it take place in real time, suddenly something new clicked for you, in terms of whatever it may be, volume or profile.
Uh, the section on the absorption and backticking,
Okay.
that was my aha. And then after seeing you, execute that in your live sessions and stuff like that, it was like, oh, okay, now I see it. Now I know exactly what he's looking at. And and when you use that absorption and backtick, basically I think it's probably 90 to 95% of my trading.
Wow.
I'm not very good at the as she goes or before she goes, but I've gotten it down where I'm pretty consistent with, fading and just looking for absorption and backticking, grabbing that one or two, maybe three ticks. And I've gone October, November, December now. I'm hitting almost 90% of my trades. Um, it's gotten to the point where it's that consistent.
That's very impressive, by the way. Let me just say that, okay? That-
Yeah, there's a lot of people out there that tout this and tout that, but it can be done, and the consistency, it's nothing glamorous. Everybody one or two ticks. When part of that aha is you've got to realize, and it took me a while, what you were trying to do here. You're just trying to find momentum, whether it's going with the trade or fading the trade. And one the webinar I took with you, the first webinar, because I've been in 3 webinars with you, but the first one in September was the first one, and the first week you made 9 ticks in 5 trading days, and to most people that doesn't sound like a lot, but right now I trade a 20 lot, and 9 ticks is $2,800 in 1 week.
right.
So I mean, this method, you're not going to pick up 10, 15 ticks in a day. It's just, if you can get consistent enough to pick up a tick, two or three ticks a day, net of your commissions and everything, I mean, you're well ahead of everybody.
Right. And I'm glad you shared that. That's something that is really hard to get across to the novice trader, is the idea that you don't have to make that many ticks if you can trade a decent amount of size. And that's why a lot of new traders go to products like crude oil or gold, because they see these massive swings and they think, well, I can trade a 1 lot in this product, and if I hit one of these big days, I can make $2,000 on my 1 lot.
Right.
But of course, they don't see the pitfalls that come with that thought process.
Right. And, the only analogy that I can give them is, if you look at McDonald's, they sell $1 cheeseburger that's not, but, if McDonald's makes 2 or 3 cents off that cheeseburger, the millions and millions of cheeseburgers that they sell in a day, or, find something that works for you. If you can find a tick or two a day, I mean, you'll make as much money as you want.
Right, right. And even that even breaks down to on average. I mean, I have to say, your your track record and what you're hitting is definitely above average. I mean, I know from speaking with you, and this is one of the reasons why I wanted to have you on, is you're obviously incredibly disciplined in terms of waiting for your spot, and that's such a key personality trait, I guess, that one needs, because definitely, I mean, what I try to say also is everybody doesn't trade the same, but we kind of do, from a scalping perspective. Even guys that I've never talked to, if I know they're scalpers or they've been on the floor, I know we're all looking for similar scenarios. And so I would agree the absorption and backticking has been one of the strongest things over the years for me. I do play a lot of momentum stuff sometimes, particularly on non-farm. So I want to throw out there for people listening that, depending on your style, some days you might get on board those moves and end up making 12, 15 takes, but you don't have to, as you're saying. And ideally, if you can just spot those really good trades and have a high accuracy rate, you only need a few ticks here and there, as you said, on a 20 lot or a 30 lot, and you're going to make plenty of money doing that. And that is how the majority of bigger traders or bigger day traders and scalpers trade. And that's how the programs operate as well. Programs aren't typically looking for 10, 15, 20 tick runs. They're just immediately looking for hopefully risk-free profits. They get in, get an edge, and scalp it. And if it doesn't go, they try to break even. And so I would say that's probably more of like what your style is too these days, right? I mean, I imagine your losses are...
I've gone 2-3 days without trading. And I mean, putting in 5-6 hours in front of the screen, just waiting and looking. And sometimes, I go in looking for a couple of ticks, but that's not the end of it. I mean, if it starts to rip in my direction, I've had, 8-9 tick moves. So, I mean, it's not, those are the home runs. I'm just here making base hits and doubles. But, I found something that works for me. The one part of your program or your mythology, the absorption and backticking, I see it and I can understand it.
And that's what matters. Yeah, and that's what I tell people. You're trying to figure out what works for you,
right?
Because ultimately, you're the one that has to make the decisions, and so that's great, though. Okay, how long did it take roughly before you started to see results? Were you seeing, some improvement after the starter videos? Were you seeing even more after the first live webinar, or did it take you a few months even after the live webinar to see improvement? So people have different progressions in terms of...
Right. Well, when I picked up the material in May and started studying, and then about a month after that, I went ahead and stuck my toe in the water, so to speak, and started trading. I lost money. I lost about, I think it was around $400 that first month, just, figuring out things. And then I lost about 100 the next month. And by the time September rolled around, we took the first webinar, it kind of leveled out. And then after the webinar, it was, one good month, good month being, a couple $100, because I was only trading one contract. It was back and forth, mostly break even, to be honest with you. I think after 7-8 months, I started really getting some traction. I attended, then you had another webinar in January, I think, no, or was it October? No. Geez, I can't remember. I took 3 of your webinars, though.
Yeah, there was probably one in February, and then the next
one, that sounds right.
The next one, I think, was the next October, correct? Would have been
right.
about a year after your first one.
The one in October, the last one, I didn't even attend. I just asked for the actual videos or your trading recaps and stuff, because I just wanted to see, you trade again, basically.
Right. And kind of see if what I was doing was probably matching up with what you were doing at that point as
well.
Right?
The one thing I also noticed that I took, I've taken all your trades and I recorded the time lapse, and that's what kind of also gave me a little bit of okay, this is what we're really doing here. We're just in and out. If the momentum's there, fine. If it's not, we're out. Your average trade was 2 minutes and 45 seconds.
Okay.
And that's probably, I think I've got like 40 or 45 of your trades recorded.
That
live.
sounds about right. Yeah. I mean, I tell people ideally the quicker the better, right? I mean, if
Well,
it,
you don't know. I mean, like I said, we're trying to catch momentum.
right.
You're trying to anticipate the momentum. Is it going to continue or is it going to fade? Now, fade has a kind of like, okay, that's the end of momentum. Well, actually, it's not. It could be the start of momentum the other direction, and
Right.
that's how I look at it. And basically, by you just you're in a trade maybe 3 minutes at the most on average. If it ain't there, it ain't there, and you get out.
Yeah.
And that's a lot of discipline.
It is, and that's something I do try to convey, because you start to learn what the expectation is for the trade. And so I've certainly set in trades for 20, 25 minutes, but those were usually only trades that never went against me, right? So with audience watching or whatever, even I might get in this trade and it might move one tick against me or it might move one tick in my favor, but I know that type of a trade is a trade that might take 8, 10, 12, 15 minutes to play out. And then if it moves 3 ticks in my favor and I still like the trade, then I might continue to hold the trade, and worst case I'll take 1 tick out of the trade. It all depends on the particular setup, but certainly ideally I like trades that work quickly, and that is the benefit of the idea of the absorption and backticking is you're catching those retracements and bounces usually very quickly because they're happening at a time when people are liquidating or going the other way.
Right.
Yeah, so those trades often do tend to work within a matter of either a few seconds to maybe a couple minutes.
Just trying to get trying to get that free look.
Right, and then it goes, and if it doesn't go, you realize, okay, this should have already moved in my favor at least a tick or two, and it's not. It's a break even, so I'll just break even and wait for the next, or wait and see how it plays out.
Right. Just look for another spot.
Right, and there's no limit on trades, and I tell people that as well. If the markets, you can get back in. So if the markets move 3 in my favor and I get out for 3, and then it moves 2 more, and I still think it's going, get back in. Maybe take another 1 tick, get out. Maybe lose 1, get out. Maybe lose 3. But if the volatility is there and the momentum is there, you keep trying to pick your spots, and you don't have to limit yourself to just the one time. You can try the same trade 2 or 3 times as long as it's not blowing through you and you're not getting run over. Okay. If you don't mind, could you just quickly give your description of context, because this is something that is really difficult to convey in the beginning, and I'm wondering like what your perspective is now that you've been doing this for a year and a half on context.
Well, context is probably the hardest thing you're going to learn or try to learn. And it just comes through experience. It just comes through screen time. There's just no other way around it. How the market's moving, the inside market, how the other markets are reacting. I think over time, that's what's made my trading better because I can sort of, you just get a feel. You just feel what's going on. Is this a good market for what I'm trying to do? And things can change. I mean, it can change within 5 minutes. I mean, you can go from ramming and jamming and, things just hopping all over the place to the market barely moving. Context is definitely the hardest thing to grasp because it's how everybody perceives the market. I mean, I could probably tell you right now what I think the context of the market is, or the 10-year, and you're going to tell me a whole different thing. It's like looking at clouds. I see a different shape, and you see a different shape. But what you teach, or what you teach, your students to look for, is a good foundation. And I think everybody just has to glean from your information and your experience, and just come up with their own kind of context of the market and how it's going to fit how they trade.
Okay. Yeah, that works.
And it's just going to take time. I mean, I've been sitting in front of this, these DOMs, these ladders, and I've basically got I've got the exact same setup that you do. And you just gotta watch it. And after a while, you just get a feel. You get a feel for, okay, I've seen this before, and with confidence you can get in and you can get your ticks, and not sit here all day and hope, because you can't hope. Hope is, you know, we're not here to hope.
It doesn't get you very far, that's for sure.
No, and it just takes screen time, man. I know everybody wants the quick result. Everybody wants to start making $10,000, $15,000 a month at this. I played college golf, and I've hit I don't know how many millions of golf balls, and it just takes a lot of time. There's no definitive answers. There's no on context. It's just you got to find what the feel is, and you'll know when you get there.
Right.
And it's probably a year and a half. I'm still learning because when I've been in where I thought, oh yeah, this is definitely a good sweet spot, and it goes against me, and you just scratch your head. You get out 2-3 tick loser, and you're just like,
That's a good summary because you're right, and that's something too that can be difficult to convey in the beginning. When what I try to do, as you would know, is I try to help people at least identify whether a trade is a good trade or not a good trade. So there can be good trades that don't work, and there can actually be bad trades that do work that are just pure luck, right?
right.
And so those trades are kind of the hardest to explain because you get into a trade, maybe you just see them hit a wall, like maybe the market's going up and you realize, okay, they're hitting a wall, they're not going up any farther. This looks like a good fade trade. And you've made this trade the last 4 days in a row and it's worked. And today the buyers are just still there, and they run you over for a couple of takes.
Yeah, but you still have to take the trade.
Yes, exactly. You still have to take the trade because it's averages. It's the law of averages.
I mean, 9 times out of 10, it's going to work, and then that one time it won't.
Right. It's always tough when you get run over, or when I get run over, and people are like, "Well, that didn't work," and I say, "No, it didn't work. You're right. I got run over." But I always take a trade in that scenario because the conditions were correct, and right. So again, that's trying to explain the context and the law of averages and the idea behind it, because you can also get in there on non-farm and just take a shot, and maybe you make 8 ticks on a trade, but there was really no information whatsoever that helps you identify direction. And if you tried that the next 20 non-farms, you would probably come out at a net loss because you're just sort of gambling. So yeah, so that's just part of trading. You can be the best trader in the world and you're going to make trades that don't work because on that day at that time there's just somebody going heavier in the other direction.
Sure.
Did you have any biases when you first started that you think possibly slowed down your progress, or was your idea about scalping not what you found scalping to be once you began pursuing it?
I guess my perception of it was, fast action, a lot of trades, just really hitting the button a lot, and just, trying to be like an HFT program or something like that. When I started with you and I saw how you were meticulously always reading context and see what, how everything's reacting and just waiting for your spot. And I don't know if it slowed me down or whatever like that. I just thought, oh, wow. I said, because I thought I was going to see a guy come in here and just start hitting orders all over the place and trading like a madman.
Right. And I mean, obviously you would agree at this point, but just to enforce this idea, would you agree that particularly for a retail trader, that is the way to go? By the time you add up commissions and exchange fees, and the fact that you can't compete on a millisecond level with the bigger banks and institutions, the way to go is high probability trades, right? You just sit and you wait for that spot.
Absolutely. I mean, yeah. I've seen there's some trading leaderboards that I've seen, and I've seen guys 150 trades in a day. And I don't even know if I could have. I'm not in shape for that kind of. I mean, that's a workout. That's not trading. That, you can go to the gym and get that result if you want.
Right.
I mean, their right index finger has to look like a baseball bat. It's got clicking so much. Um, it goes back to, this is very steady, very methodical. You're trying to pick up some ticks. I mean, if a guy averaged a tick a day, that's 20 ticks a month, basically. I mean, and if you trade 20, 30, 40 contracts, I mean, that's more than enough.
Agreed, sir. Agreed.
I mean, so, I can't imagine sitting here for 6 hours and putting on 200 trades. I mean, all I'd be doing is paying my brokerage a pretty hefty sum.
That is correct. Them and the exchanges.
Well,
Uh,
yeah. So, I mean, I'm looking for a nice, good area. And I only, if I mean, 2 or 3 trades a day, really. I mean, I mean, for me, that's what I look for, and things set up. And like I said, I've gone 2 or 3 days without even trading.
well, that is solid discipline, sir.
And, some days, it could be 4 or 5. Some days it can be, I mean, I think the most I've done is like 7 or 8 trades.
Okay.
It just depends what the context is, what's moving, what levels in the profile. Um, I don't even look at a chart anymore. I haven't looked at a chart in 6 or 7 months. I noticed in some of your webinars you pick out spots on a chart and stuff, and it got me to kind of I got in trouble with my trading there because sometimes I would just automatically throw in a bid or an offer at those levels, and then all of a sudden it just goes right through it. And then I notice 2 or 3 ticks away from that level, there's the absorption and backticking. And you're like, why didn't I just wait? You know what I mean?
Right. Right.
And
There.
because, 2 or 3 ticks or a tick here and there, your entry, it's very critical. I mean, you know, I've gotten, I've puked out at, 3 ticks and it goes right again, right back to where I was. And those are the worst. I mean, you just, you just shake your head.
They definitely are, and typically, again, that's more about experience and context, and with regards to those levels. For starters, the fact that you recognize that was hindering you and then you stop doing it is a positive. So, like, if you don't need them at all, that's fantastic and that's great. Again, it's always about finding what works for you. I point them out and I make marks on my depth of market, because often obvious support and resistance levels do end up playing a role at
Right.
some point right in the day. But again, I'm adapting based on the order flow. So
Right.
if it's coming up to, say, a price of 10, as you know, I don't automatically have a bid or an offer working at 10. I watch to see how the order flow is behaving around that level, and that's how I try to keep myself out of the trades you just mentioned. I try to avoid.
Well, for me, it was just being lazy, because it went down there once and it worked, or, it bounced, and then you're like, well, we'll do it again. And you just go ahead and throw an order out ahead of time, and it just goes right through you. And
Right,
it just me being lazy.
right,
Just wanting, it goes back to that simple, everybody wants that simple system to where, you just turn on the computer and you make $1,000 a day,
right.
and you don't put in the work, you don't put in the time. And because no matter what, there's always 2, 3, 4 opportunities all day long where they'll be crystal clear that you should get in. And either fading or as she goes or before she goes, it'll be, I mean, when I start, I also recorded my video, recorded my trades. I did that for 7, 8 months. And you'll begin to see where you should have been participating instead of where you wanted to, or just being lazy. It becomes almost crystal clear.
Yeah, I'm glad you mentioned that about the recording your trades, because I think that's one of the best ways for a person to improve.
Well, you're going to learn from your mistakes. And like I said, I mean, you know, oh, okay, there's support at 10. And if you just throw your order out there, you're basically trading off a chart again because, I'm going to trade off this line. Well, that line it might be there, it might not. That line might be another 2 or 3 ticks away from your number. And then you'll actually see it develop as a fade or, as she goes, before she goes. And, the trades will be there. I mean, you got to sit back and you got to just pick your spots. You got to get good at one thing, really just get good at one thing, one of the concepts that you teach. And you had mentioned that in one of your webinars, if somebody would just get good at either a fade trade and then you move on to the other, before she goes, as she goes, but, try one thing, get proficient at it or, consistent enough, and then you can move on. I just, for lack of, I don't know, laziness or whatever, I just haven't moved on because it's been so good to me that I know I'll have 2 or 3 opportunities in a day to, find a good absorption and backticking spot. And I get in and 2, 3, 4 minutes. If it's not in my favor, I just usually get out. And since October, I've been pushing 90%.
Yeah, man, that's really excellent, which I'm glad to hear. Obviously, I mean, I do run a business, but the intent of it is to help people. And I always try to come across that way. I am sincere about that, and it's nice to know that some of the customers go on to achieve really great results like that. And it's the old saying of if it ain't broke, don't fix it. I mean, I would agree with that with you. Like, you don't really need to try to become better at breakout trades. You don't need to become better at playing in non-farm volatility. If you have something that's working for you this consistently, you just increase size and continue to do it. And that's how you make more money. You don't make more money by necessarily learning a different technique. You make more money by increasing size. And that brings me to the next question, which is, you do strictly only trade treasuries now, right?
Yeah, and in fact, treasuries, but I've only since day one, the only trade I've taken has been in the 10-year.
Okay. So
I mean, I am solely a 10-year guy.
Okay. And Matt is the same way. And Matt, somebody else who has been in the interviews, and he was also always a 10-year trader. And I typically advocate that for most people, because you have less volatility in your P&L swings. The 30-year and the ultra bond are obviously more volatile. So yes, when they run, they might run 8 ticks, whereas a 10-year only runs 4 or 5. But often in a 10-year trade, the market may not even move 1 against you, but the 30-year is 3 against you, and you get kind of caught up in. It's very easy to get whipsawed, in the 30 and the ultra bond. So I think the 10-year offers people a much better learning curve in terms of P&L, and probably overall just generally better results if you're looking at drawdowns versus profits. So, okay, yeah, so only the 10-year and only treasuries.
Yeah, I've only stuck with the 10-year. Some other traders that have been successful out there, a lot of them just advocate, specializing. And I mean, trading is completely, it's the hardest thing I've ever done. And I mean, you see some of these guys trade 5, 6, 7, 10 different markets, and it's just like, how can you keep track of all that?
I think with them, the ones that are successful, again, it's guys that have been keeping track of it for many years.
Yeah, but the majority of the successful guys, they actually just specialize.
Yeah, no, I agree. Most of them,
market, and they'll go dabble in the other ones. But I mean, most of the professionals, they say, just stick to one market.
Yeah, most do. Occasionally in the stock trading world, guys might be able to monitor a few different stocks, but even there, they're typically monitoring 5 or 6 that they know very, very well, and then they go and play in the ones that are moving. Have you had any extended losing periods? It doesn't sound like it except for the beginning, but have you had some drawdown periods? And if so, how did you deal with that? I guess going back through your recordings would have been one way to deal with it, but any other comments on that?
Yeah, of course, I've had drawdowns. I mean, I've averaged, let's see, about in the last 8 months. I mean, not in the last 8 months, but the last 6 months, I've been pretty consistent. I'll go maybe 2 days. I average about 2 losing days a month. But before that, I've had 3, 4 days, and it did be like 2, 3 tick losers, 1 tick losers. Um, how I deal with the drawdowns, I just kind of step back and I go back to your videos, and I guess your calm, soothing voice kind of, okay, calm down. It's just the market being the market, and just reinforce and go back through my videos and see, did I do something wrong? Was it a knucklehead? Was I being lazy? Was I trying to, anticipate too early?
So to summarize, obviously you're doing well. That's good to hear. You're up to a 20 lot. That's also the benefit of the 10-year is you could pretty much trade a 20 lot or a 50 lot like you trade a 1 lot. Strangely enough, another reason why I have people focus on that product. And would you happen to have you've given plenty of advice, but any final thoughts or words of wisdom for new traders out there who are attempting this?
Yeah, just it does work. I mean, the principles and concepts that you do teach, they do work. I've seen it. I mean, it's just going to take time. It's just like learning anything. I mean, this isn't going to happen overnight. You got to put the time in. You got to put the screen time in. Um, it looks daunting at first, all these numbers whizzing and going up and down, but after a while, your aha moment will come. It just, you know, nobody knows when. I mean, but the light will come on, and you'll find something that'll work for you, and it'll click. Just stick with it. If you have to take another webinar or something, I know you do it at a reduced price the second and third time. Do it. I mean, if it'll help, because like the first webinar was in September, and then 4, 5, 6 months later, there's another webinar. So market conditions may have changed. So you might actually see John trade. Well, obviously, market condition will be different. So I mean, always taking a second or third webinar is always a good idea. Recording your trades, learn from your mistakes. I mean, it's very cliche-ish, but it's there, and you just got to put the screen time in. And pretty soon you'll see what you're looking for and what you want, and just be disciplined enough, and don't rush into things, and don't, whatever you do, don't be taking 5, 6, 7, 8, 10 tick losses. I mean, John teaches momentum, whether you're fading or going with it. And if it doesn't happen, it should be pretty close to within minutes. You just get out, because that way you're out of that trade, and you can start looking for another opportunity that will give you what you're looking for. Because you got to go into a trade with a purpose. And if you're in there to get 1 or 2 ticks, you can't sit there 30 minutes, and if the market's just sitting there, that's it. That's it. There's no participants, there's no heavy hitters, there's just no momentum. And for whatever reason, it doesn't mean that you were wrong, doesn't mean the trade was bad. It just didn't pan out. And there's a lot of that.
For sure.
So just, stick with it. Go over your material as much as you can. Start, I started with $1,000 in the account, a 1 lot. And, I've gone up and down. I've tried to press it, adding contracts and stuff like that. Just, the guidelines that John has are pretty good. If you make 15, 20 ticks, maybe consider going up a contract. I've always kind of used that 15 to 20 ticks net of commission, and then, consider adding a contract or so.
Okay, sir. You have a good day, and hit me up anytime if you need anything. All right, Joe?
No problem, John. And if you need anything from me, just let me know. I'll be more than happy to help you any way I can. Okay?
All right, sir. I'll talk to you later.
Okay. All right.
Thanks.
Take care, John.
Bye.
Bye-bye.